Okay, so now we are going to talk about spending money going out of your business. To spend or not to spend? That is the question. So first, I'm sure many of you are wondering what counts as a business expense. And this is a completely legitimate question. If you have never run a business before, have never talked to anyone, it can be really confusing as to what you're allowed to claim and what you're not allowed to claim. So the IRS likes to use the definition of ordinary and necessary when determining if an expense can be deducted for business. So this can mean a lot of different things for a lot of different people, and you have to take into consideration your specific business and your specific industry when determining whether an expense can be deducted and whether it is ordinary and necessary. I like to define it as this. Anything that you spend your money on that directly benefits or sustains your business is more than likely a deductible business expense. And I'd like to go into some more details and give you guys some really good examples to help you understand this better. But I first want to give you this reminder that, as we've talked about in previous lessons, getting our ducks in a row, the business expenses need to come out of your business account or from your business credit card, not your personal bank account. Obviously, if you've been running it out of your personal bank account in the past, you can still deduct those for that period of time, but you have to work a lot harder to substantiate those as business expenses if you were ever to be audited. So just to help you out, and the reason that I have set this course up so that you know the steps you need to take to get your business in order, you need to make sure that you're spending money out of your business accounts to make them more legitimate business expenses. So here's some simple expense examples, things that can basically apply to almost any type of business. Office supplies, that's like number one for most people. And what your office supplies look like can be very different depending on your industry. But things, such as paper, pens, binders, notebooks, staples, staplers, small accessories for your computer like a mouse or external keyboard, anything like that small stuff can all fall into the office supply category. App subscriptions. Obviously, this is something that's growing a lot more now with technology being so integrated into our businesses. So subscriptions to things like Evernote or Dropbox, or even paying you a monthly fee to use Google Apps for work, or even industry-specific applications, or your bookkeeping software if you're paying a monthly subscription, are all business expenses. Business or professional licenses and fees. So if you're in an industry that requires a professional license, you have to pay a licensing fee each year, or if you're in an incorporated city where you run your business, even if it's a home office, you still have to register for a business license. And that's something that you should research within your own location as to whether you are required to register your business and pay for a business license. Reference materials. And this can refer to manuals, Pantone color swatches, publications that are specific to your business, or it can also be things like online courses that, like this one, is a business expense because you purchased it with the intention of learning more to better your business. You can also write off advertising costs, and this could be Google ads, Facebook ads, paying for advertising in a local publication or a national publication if you're on that level. Also, little things like printing flyers or brochures, those all fall under the advertising costs. So like I said, the brochures, the business cards, all those little things can fall under advertising cost. Contract labor. So this is when you are hiring subcontractors. They're not your employees for specific projects or to accomplish a specific task. So often this is maybe a virtual assistant, or say you pay a service to handle medical billing for yourself, or you pay someone to take care of your website. So little things like that where they do not qualify as an employee, but they are offering services to you that would all fall under contract labor. Items for resale. So whether you are a full-blown retail business or you have a retail element to your business, then those items that you're purchasing for the purpose of reselling to customers are very much a business deduction. Rent and utilities. So this is specifically for if you are renting an office space or a warehouse or some sort of area that's outside of your home. If you're paying for rent and utilities or rent or just utilities in a space outside of your home for office or business use, then that is a deduction. And then the last one I have here is business insurance. So whether this is general liability insurance, whether this is industry specific liability insurance, any insurance that is in your business's name to help cover you and protect you in your business is very much a deduction. Another question I get a lot, and I hear this, is do I need receipts? So the short answer is yes. Yes, you need receipts. You should always have some sort of receipt to substantiate your business expense. So this could be from an email that you sent, a physical receipt if you bought something at a store, or a digital copy of both saved into one location. So a lot of times if you buy something on Amazon, they'll either email you a receipt or you can download it from your Amazon account. If you went and bought something at Staples, they'll print out a physical receipt for you. So oftentimes in today's business world, we have this odd combination of both physical and digital receipts. And so I like to combine those together into one digital filing cabinet, and it will make your life much easier. And again, the reason is that for keeping these actual receipts is that the transaction on your bank account or credit card isn't enough to prove the business purposes to the IRS if you're audited. They can't see what you purchased just by looking at your bank statement and seeing that Staples or Amazon or any other store that you may shop at. So you need to have a receipt to show what you purchased, not just where you purchased it. So there are some great receipt tracking tools that you can use to help simplify this portion of your bookkeeping and accounting. So most online softwares have an option to load the receipts directly into their system, and then they can match them to your bank account or your credit card register. So all of the softwares that I have mentioned in passing in the past, such as Wave Accounting, FreshBooks, QuickBooks Online, Xero, they all have a built-in receipt capturing feature into them, and you can use that. Usually it involves a mobile app for your smartphone or your tablet, and you can snap a picture and load it right into the software, or they'll have an email address that you can forward some of those email receipts to this specific email address, and it'll load into the software. There's also a few other programs made specifically for storing receipts and tracking the expenses. So I wanted to give you guys a few ideas if you want to do some research and look into those. So a few that are specific to expense tracking are Expensify, Receipt Bank, HubDoc, Shoebox, and Neat Receipts. And Shoebox is kind of cool if you have a lot of physical receipts, a lot of printed paper receipts, because they do have an option for you to mail an envelope of receipts to them, and they will do the scanning for you rather than having to scan them yourself. And Neat Receipts is one that you can purchase a specific scanner from them that goes with the software and scans all your receipt into it. And sometimes people don't really want to use a receipt-specific software, so you can use something that you already are using on a daily basis, such as Evernote, Google Drive, or Dropbox. If you're an organized person and you have a system to set up those folders or tags or notebooks, however that works for you, and use scan or take pictures of all of your receipts or forward and download and save all of those things into those folders, then that works great as well. Just make sure that you're not missing things. So now we're ready to talk about expense categories. And I want to explain to you the difference between tax categories and tracking categories. So first I wanted to show you tax categories. And like I said earlier, I am designing this entire course to be speaking to sole proprietors, which means you aren't incorporated, you don't have an LLC. So this snapshot that you're seeing here on the screen is from the tax form called Schedule C. And if you are a sole proprietor, this is the form that you are going to file on your taxes. Now, I'll go deeper into the taxes and the form itself in our lesson on taxes, but I wanted you to see this section because these are the official tax categories on the form. So you can see they're pretty vague, rather non-descriptive in a lot of ways, and it can be very confusing as to what types of things should go into these categories, especially things that you've probably never even heard of, like depletion and depreciation in Section 179 and employee benefits, but I don't have any employees. And, well, it says wages, but is that where I put where I paid myself? So we're going to go into a lot more detail about this, but I wanted you to see what the tax categories are first, so you understand that there really is two different types of categories when we're talking about categorizing your expenses. So now I want to talk about tracking categories, and often this is referred to as your chart of accounts. So there's a key word for you that you'll hear if you ever talk to an accountant or a bookkeeper. They're going to ask or make mention of your chart of accounts, and that includes your tracking categories. So in any program or system that you are using to track your finances, you can customize both your income and expense categories so you can track specific things in better detail. And the best way that I can explain this is by giving you guys examples. So the first tracking category example I want to give you is a graphic designer. So Gina is a graphic designer. She has 3 main streams of income: custom design work, pre-made graphics she sells through an online marketplace, and an ebook she wrote guiding people on how to use Adobe InDesign. It's a really expensive design program if you're not familiar with it. She has a lot of app subscriptions, buys custom fonts and stock graphics for certain projects, and occasionally hires out some work to another design assistant. So this is an example of what Gina's income and expense categories might look like. Under her income categories, she wants to break down her 3 main sources of income so she can see how much money she's making in each stream. So she's going to have an income category for custom design income, an income category for e-commerce sales, an income category for ebook sales, and then I always like to include a category for other income because there are weird random things that come up sometimes that don't fit into any of those categories, and we want to have a catch-all for that, especially on the income side, not so much on the expense side. Now for her expense categories, we're going to have some of the general categories that apply to everyone, like advertising, business licenses as fees, contract labor, bank fees, interest expense, insurance, meals and entertainment, travel, education and reference materials, office supplies, postage and shipping. All those sort of things are categories that could apply to a myriad of different businesses and industries. But there's a few here that are specific to her and her needs. So one of those is apps and software subscriptions. And that may apply to a lot of different businesses as well. But specifically in Gina's business, she has a lot of app and software subscriptions. So she wants to make sure she has a category specific for those so she knows how much is she spending each month and each year on that category. Another one is credit card processing fees, which I also refer to as merchant account fees. Because she's selling things online and she's taking credit card payments, all of those fees that, just like anything from Square and PayPal and Stripe, that 2.7, 2.9% plus 30 cents, depending on what plan you're on, those fees add up, but they are a deduction. They're a business expense because they're part of the cost of doing business. So you need to be able to track those specific fees. Another one for her is cost of goods sold. And this is one that you hear a lot, and it's a very confusing term, and I want to break it down for you. And I'm going to break it down for you more when I explain the profit and loss statement and the balance sheet, which are your reports. So don't worry, we're going to go into this in even more detail later on in this course. But basically, what cost of goods sold is all of those purchases and expenses that go into a product that you are then selling to someone else. So if it's a simple retail business, all of your inventory that you're purchasing is part of cost of goods sold. In Gina's case, it's a combination of the cost of, say, a graphic or a font that she uses in a product or a design that she's then selling to a customer. So it's something that she bought for the use in something she's going to sell. Direct connection, not something like the program where she's using that for many different projects. It's something she bought specific to a project to then sell. Another thing that she has to worry about is domains and hosting. Now, hopefully most business owners in this current age have a website, but they may pay someone else that handles all of that for them, or they may pay the domain and hosting themselves directly to that service provider. So she wants to make sure she knows how much her cost of her registering her domain and her website hosting are. Also, she has a specific category for graphics and fonts because, like I said, she's buying a lot of graphics and fonts for her design work, and she wants to be able to track how much she's spending on those things. And last but not least, computer equipment. Now, this is something I'll go into a little bit more detail when we start talking about balance sheet, but she needs to be able to easily and quickly track what is computer equipment. So some more of the bigger purchases like a new laptop, a printer, a scanner, a microphone, a webcam, a tablet. So those sort of things she wants to make sure that she's tracking. And here is our second example. So tracking category example 2 is a massage therapist. So Devin is a massage therapist. He primarily works out of chiropractic offices. So those offices charge the clients and then pay Devin his portion of the treatment fee. He gets issued a 1099 miscellaneous from the work he does at those offices. So he's not directly collecting any of the money at his chiropractic offices. He gets paid from the chiropractor. But he also travels to clients' homes to give private massage. Devin also sells a special line of organic oils and lotions to his clients, which they pay him directly for, either by cash, check, or credit card on his Square reader. So here's an example of what Devin's income and expense categories might look like. Again, he has 3 different streams of income. Now, just because my examples happen to be this way, each of them had 3. But you can have 1, you can have 2, you can have 5. Everyone's business is different, and how specific you want to track things is how you're going to do it. You don't want to have an income category for every single service that you offer. That would be a little bit excessive. But I usually say anywhere from 2 to 6 income categories is acceptable. So he has his treatment income, which is basically coming from 1099s, his private massage income to his private clients, and his product sales because he's selling that line of organic lotions and oils. Now, his expense categories, you're going to notice there's a lot of the same things that Gina had for her graphic design business. He has advertising. He has app subscriptions because he uses an online booking software. He has credit card processing fees because he's using a Square reader. So they're going to charge the client and then take their portion out before they pay Devin. He also has cost of goods sold. So he has 2 elements to his cost of goods sold. He has the product itself that he orders wholesale. And he also has the packaging because he doesn't just sell the individual bottles. He likes to make pretty gift packs out of them. So he buys pretty gift bags and tulle and things of that nature to make it look prettier. He also has sales tax expense. And I know you're wondering, well, wait a minute. Gina was selling stuff, but she didn't have sales tax. But Devin's selling stuff and he does. What's the difference? Well, here's the big difference. As of right now, in most states, digital products are not taxable. So you are not required to collect sales tax on digital products. Physical products are taxable. Obviously, this varies by state, as some states don't have sales tax at all and others do. So you will want to do research based on your specific location. But say Devin is in California like I am. we definitely have to charge sales tax. But because sales tax is something that you collect from the customer and then pass on directly to the state when you file your sales tax return, you claim it on your income and then as an expense. So it doesn't cost you anything. Some other things that he has obviously are like education for his continuing units to maintain his massage license. He has insurance because he wants to have liability assurance, especially since he does travel to private clients' homes. And he has his memberships and dues and licenses and all that sort of stuff to make sure he's maintaining those professional licenses. So that's just another example. Again, these categories are not exhaustive. So there could be a lot more that apply to each of these person's businesses and a lot more that may apply to your business. Your chart of accounts may look huge compared to this. It may look really small. Yeah, like I said, everyone is different. And also, you don't have to have your categories perfect when you first start. You may need to add a category as you go along because you realize none of the categories you set up work for that particular expense. So it's okay for it to be a work in progress. You just don't want to get to the point where your categories are so massive that it's difficult to then condense them back down into the tax form. So like I said, there's no one cookie cutter set of categories that will fit every business. Most businesses are going to have a custom set of expense categories. And when you set up your business in an accounting software, it may come with a default chart of accounts, a default set of categories, but that doesn't mean you can't change those. Those are just the default to help you get started. So like I said, tracking categories are for your benefit, but you'll still have to condense them into tax-friendly categories at tax time. So there's two options as to how you figure this out so you know which of your tracking categories go into what tax category. Option one, obviously I prefer because I am a tax professional and I know how difficult this can be for someone, is to hire a professional tax preparer to help you determine what should go where. Also, side note, this also generally lowers your audit risk by not being a self-prepared return. So there is a slightly lower risk of being audited by having a professional prepare your tax return. It doesn't guarantee anything, it doesn't guarantee your safety, but it does guarantee that someone who knows what they're doing is helping you prepare your taxes, someone who is more familiar with the tax laws and regulations than just answering yes or no on TurboTax. Option number two, if there is no way for you to hire a professional, then I have created a tax expense category cheat sheet for you. So you can use that if you have to self-prepare, and it will kind of help you know how the rules that I use generally for businesses as to where to put certain categories. And there are going to be differing opinions from different tax preparers because the tax code is not all black and white. It is pretty gray. So not everything is very specific for that. So those are your two options for fitting tracking categories into your tax-friendly categories. And I wanted to, again, point something out as I did earlier with a reminder, and that is just because it came out of your business account does not automatically make it a legitimate business expense. So you cannot cheat the system by purchasing things for your home with your business account and then writing them off. There are some blurred lines that may happen with office supplies and school supplies for your kids or certain supplies back and forth. But don't count on the fact that you used your business card to make it a legitimate business expense. Again, back to what we said in the beginning, it still has to be ordinary and necessary for your line of work. So that's the sort of things that are going to go into this equation as we're deciphering. I'm also going to put some really good resources in the resource section of this lesson. Some IRS publications, which I know can be a little bit dry, but they will really break it down for you. And so I want you to take the time to look at some of those resources, especially if you have questions about specific categories like meals and expenses or entertainment or advertising or office expenses. Some of these publications can help you understand that better. And I also have links to a few blog posts that I have written in regards to certain types of expenses and explaining them in better detail.